Hello, this is Howie, and I'm here to help you win with money. Finally, week number 5 is over. Today is February 6th, 2021. Before we go on with the transaction history and everything else, we'll just do a quick recap. Markets are at an all-time high. It was a great week. It was a nice run. I believe it was like 4 days up in a row, maybe even 5. I don't even remember. But it was a great week. Your 401k plan should be at an all-time high because of every index is at an all-time high. Switching gears slightly, let's just take a look at Cointelegraph and look at this here. Bitcoin just broke $40,000 on Saturday. Ether has been running up prior, so even Ether was hitting all-time highs yesterday, and this is good. This one is not good. I don't care about XRP. I don't follow Bitcoin Cash or EOS. Really, I only follow the two, but some people say you should follow maybe the top 10. Bitcoin Cash is interesting because some people say this one is a very usable method of payment. So that's why people do like Bitcoin Cash. You can spend it in less than maybe 3 seconds later. Confirmation is done. Bitcoin will not do that. Bitcoin takes 10 minutes for the first confirmation, but a lot of times you need 5 or 6, which can be an hour later. But anyway, I'm not here to explain all the differences. What we care about is, should you keep on investing in it? We can take a quick look. They're saying, oh, the whales sold and they sold at the all-time high, and then some of them rebought back in at a lower price. So if you're doing that, you're trading for the price swings, and this guy goes into all the technicals about bull flags and this and that, and for those who follow, charting, maybe you do care about it. For the general population, we just don't care. We're sort of looking at it and say, hey, I'm dollar cost averaging. I'm going to keep on buying it regardless if it goes up, down, or flat. I will make money 5, 10, or 20 years from now, or I will lose everything I put into it because it goes to zero. Time will tell. I don't know which way we're going to go, and part of me don't care. Part of investing is managing risk. I don't put 100% in any one asset class. In fact, most people know, you should diversify and use a little bit of everything. So we do teach, use stock market, use bonds if you want, use a dividend stock, use real estate, use insurance products if you have to. If you have even more money, buy collectibles, right? You can buy antique cars, you can buy paintings. If you're into commodities, you can buy gold and silver. But it's all up to you to figure out how to diversify. So let's go now to ETrade. And here is my account. It looks pretty decent. I didn't do a lot of trading in this particular one. But what you care about is, while we're tracking, what I care about is this. What was the last day I have data for? And in February, you can see it was the 2nd. So the first thing I want to do is copy in all the data from the 3rd, then the 4th, then the 5th. And if I do it in order, it won't be that bad. So this one will take a little bit longer. I'm not going to show you copy paste each screen, but I'm going to have to do that first and then format everything. So I will do the magic of editing here. So let's copy the 3rd, which is over here. I don't even remember what I did. These were closing and opening SPYs. Paste there. Now I got to find more. Hang on. Okay, I found some more. I did more SPY on the 3rd. Do a quick paste. There you go. Those are all the 3rds. Now let's move to the 4th. And over here, the 4th. I have a little bit more over here. Let's copy those 2 out. Paste the 4th. Now I need the 5th. I copy the 5th, the data. I close out KSU, and I did some other stuff here. And let's copy the 5th. And there you go. From a data point of view, this is how many transactions I'm fixing. You can see that. I don't need to see the details, so I can do this real quick. I can just do this, and then I'll fix it because I have to set everything else up. But this is how I fix my data. You can see that everything is formula based. When they're formula based, they do it on their own. So let's just set the fonts, set the type. I normally hide this side because I only use that for date formatting, and then the month ID. And now I'm going to fix everything else. I think I fixed everything. The key is making sure all of these are right. This is right. The dates are easy. I got to make sure everything in this column is right in this column. So everything looks good. I added some comments and I numbered them all. There's some interesting ones, like I would not count Skechers multiple times because I did a trade, then I did a trade again. I only count that as one trade. Um, Again, I don't want people to think I'm just doing trade just for the sake of doing it. But look, I made profit here. That's 13 bucks. Then I did another trade to push it out next week, and I made another $18. But I count it as one trade, so you don't think I'm just doing weird stuff. I am making trades, but I'm not doing it just to hit the 1500. I'm still trying to make a profit. So those two combined made me $32. Now it does skew the data because if you're counting as one trade, it means you made more profit, even though I really did two different trades. But some people think I'm doing these things to hit the 1500 trades per year. Again, I'm not trading for free. I mean, there's cost to it. I pay 50 cents per contract, so you're not going to do trades just for the sake of doing it. You got to make money while you're doing these trades. So follow me along. Let's go to the top. We're going to do a pivot because I haven't done this update in a while. You should see a couple things update. Look at the dates. And there you go, the 3rd, 4th, and 5th. And there you go, you'll see it. Didn't really make any money here. And let's go to the end of the month. So this is our first week of February. I'm at $1,000 for this month here, and we're up to 6,000 this month. So let's copy that in, move it here. We're gonna scroll it here. We're gonna paste that, and then I'm gonna take this data, pop it here, mark this yellow, and I'm gonna just finish formatting this. Okay, I fixed everything. All the numbers look good. I confirmed it. So I copied everything in. Week number 5 is in the books. I marked it as green. Next week will be the 6th week. Here we're going. We're at 182 trades. Not a lot of trades last week, but there was enough profit. It was over 1,000. So there's a couple ones I want to talk about. GW Pharmaceuticals. There's a couple of them that I want to talk about. GW Pharmaceuticals did really well due to merger news. The other one that did really well is cannabis-related industries. Cars are starting to move up. If you own Ford, GM, and even Teslas or any of the smaller EV plays, most of them are starting to move up again. But mostly the GM and Ford look like they're really interesting plays. I've been following footwear. Nike, Skechers, Under Armour. Under Armour appears to be going up, and I don't know, will they break into $20 in the next month? Skechers actually went down. It sort of hit 20 or 38 or 37, and then it fell down a little bit on Thursday or Friday when it's earnings. So there's a lot of interesting things to watch. I follow multiple industries, but I wanted to show you my KSU trade. So KSU was this one that I created. You can see the trade numbers. This number is weird. That's wrong. I have to fix that. That would be... Actually, it's kind of hard to explain. I must have sorted it the other day, and I messed up the pairings. So some of the numbers got messed up, but I assure you I didn't double count 104. The numbers were done on a proper day, but somehow I hit one of the sort, and I don't know. I think it changed the thing, but I'm not worried about the trade counts because I'm sure I'm going to hit over 1,500 this year. But what I wanted to show you was I collected. If you look at this set of trades, I collected $392 when I opened it. So I was doing a earnings play on KSU. And I'll stretch this out a little bit so you can sort of see what I was trying to do. And it stayed in the range. You can see my short put is at 127. And 195 is a short put, and the short call is 227. And I got in right on the 21st. And then the earnings popped it up, and the highs, you see it hit like $121, so I was still $6 away. Then the stock just it didn't hold, and it started dropping, and it almost tested the other side. It went as low as 200 recently, and then you see it went back up and down. So it stayed in a nice range, and I would only lost if it's under 195 or above 227, and it did not. So I ended up closing it. The only thing that was remaining was some time, and so I had to pay money to close it because of time. You go back here, I closed this on the 5th, and if you just do something like this, you can see it cost me $108 to close. Now, there's an interesting thing about this. Even though I made money, there was definitely no volume. It was really hard for me to. Ideally, I would have liked to sell out even a week into it instead of 2 weeks. And if I didn't sell it this week, I would have had to wait till the 3rd week. Now, I did make 200 and whatever it is, $280 in 2 weeks. You divide that out, that's $142 a week. It's not bad trade. And I use my width of this is $5. So if you do the math, 5 times free is 1,500 is what I risked, and I made 284. So if you risk this much, and if you made 284, you can figure out how much you made. And I'll show you. I want to make sure I'm doing this right. So it's the width, yeah, it's a $5 width times number of contract is free. That's how much cash you needed in buying power. So that looks right. I don't think I did the math wrong. This is my profit at the end of the day because I can see that here. You did a subtotal of all of the, and so I made 19% in 2 weeks. And if you divide that by the number of weeks, let me just double check the calendar. I got in on the 21st and I got out on the 5th. Here you go. So even if you want to count 3 weeks, I'm okay with that. If you wanna just, I don't care how you do the math, right? If it makes you feel good, I'm not gonna divide it out by day, but whatever you want to do, you can do 2.2 if you want. So my rate of return, it's about 8% a week on this particular trade. Now the reason why is there is a IV crush, so most of the value is lost after earnings, and if it stays within your range, it's not going to hurt you. And then the time decay is really not the part that made me money. It was just it stayed within the range. Nothing else is going to cause the stock to move unless things like a merger news or something that we didn't know about, or a CEO is, indicted with fraud or something like that. But that's generally what happened. This is the reason why if you play earnings, you can make a little bit more. I took a little bit of risk. I didn't do so well on Intel, so I'm actually stuck in Intel and stuck in a few other trades. But I'm going to play a few more earnings play. There is a lot of earnings next week. I'm going to pick another one now that I released some cash here, and I'm going to do the same thing. I'll pick another one where I'll do something similar. The next thing I want to talk about is Skechers. You can see what I end up doing was I was playing the earnings, so I created this one here on the 5th. You see on this day, it was expiring worthless, trade number 153. Here you go. It cost me $3 to close. I moved it to $38.50, and I collected $80. Okay, so that's step one. What happened was over the week, Skechers started moving up. As in, markets believed that Skechers were going to hit numbers and it was going to break above. It was getting close to my strike price. So what I did was I moved this out 1 week. So I rolled, right? So what I ended up doing was I rolled up and out 1 week. In exchange for that, I collected a whopping $3.97. Then earnings came out, and guess what? They didn't do as well as they should. Wall Street didn't like it, so the stock went down. Now I could have did nothing, right? I entered this trade with a $39 at this point. But what I ended up doing was I now then said, let me close that one, and now I'm rolling down and in 1 week. So I rolled it back to the current week. Then what happened was the market on Friday were so strong, this thing was near the money again, because you can see this. It cost me, this contract, the $36.50 cost me $44, or I received $44. But in order for me to close it on Friday, it cost me $90. So some people say, well, didn't you just lose money here? Well, you would lose money if you just ended the trade there. What I ended up doing was I rolled it out to next week, and I rolled it, right? I rolled it up and out again, if you think about that. And when you add all that up, well, it doesn't look like I made much. I made $116 playing 1 week. And we'll see what happened next week. And if you keep on doing this, I changed the formula here so that you can see, even in one holding in Skechers, I made $1,000. Only owning 100 shares of Skechers. And you can see the strike prices are, right here was 36, 34, then it drops down. So I made $1,000 even if the price of Skechers stay within $30. You see that? From 30 to, let's say, 40. I made $1,000 regardless of what happened. If Skechers goes down, let's say, to $31 and stays there all year, I would still be writing cover calls every week, and I'll still make money. If Skechers goes up to $40 or $50 or $60, I'll make money, and my underlying will be worth more. So the whole point of cover calls are, yes, you can lose money on your underlying. It can go to $20 a share, and you can lose money. It can go to $0 a share, and you'll lose all of it. But if you're making money, sometimes this cash, you don't need to buy more shares. Some people like buying new shares, and that's fine. I will probably end up buying shares of things like SPY or a mutual fund that I wanted to own, or maybe an ARKK, an ARK fund, or just leave it in cash. As an options trader, cash is pretty good. You can do a lot of stuff with cash. I can do spreads. I can do cash secure puts. I can do more options trade and make more money with the cash in my account. I don't have to have a desire to buy a share if I don't care about it, if I don't want to own it, or if I feel like that stock is not really worth that much. And let's say I don't believe that the value is there. And that works for any stock, whether it's Amazon, Tesla, or IBM, or whatever it may be. If you don't think the stock is worth anything, you don't need to use your cash to buy it. I just do a cash secure put, like I do that on Riot. What if Riot is only worth $2 a share and it's only trading at 22 or 23 bucks because that's what the market says it's going to be worth? I don't know if I want to own the share. If it drops 5 or 10 bucks, I'll start rolling my options strike price down. So anyway, that is the end of this particular episode. Hope you enjoyed it. You see what I'm doing. Lots of trade. I'm using this new format where on the weekend I'll explain more of my trades, what I did throughout the week, so that I want to keep Monday through Thursday or Monday through Friday episodes a little bit shorter. You're not going to see the transaction logs for those. And for those who want to see the weekly update, you'll see the log. You'll see me explaining some of the trades. I'll talk about what went well, maybe what didn't go so well. And then this way you can also learn and hopefully you improve your game. If you like what you see, please subscribe, hit the like button, share with a friend who may need to know this. Option trading is risky. Please do not do this if you can't afford to lose money. This is for educational purposes only. I'm not a FA. I'm not a licensed investor. We're just here to share what we're doing. Options trading can be profitable if you know what you're doing. If you don't know what you're doing, it can be a very expensive education or a very expensive hobby. So please be very cautious, understand the risk, make sure you don't trade what you can't afford to lose. So I'm on my way to hit the 1,500 trades for 2021. My goal is to be profitable. I want to make sure most of my trades make money. So come with me on this journey. Let's do this together. Let's do this $1 at a time. As always, have a profitable day. Bye-bye.